All right, hello everyone. Let's do a weekly wrap up. Now, last week, let's see what happened. First of all, let's do this. It's good to have a weekly wrap up so we can follow how things are going. This is last week, right? So 15 to 21 September, I posted the swing days at the end of August, and this week I'm going to start working on October, and hopefully they'll be up and running this week. Okay, so these were the swing days: gold, euro, dollar, Bitcoin, SP 500, Dow Jones, Nasdaq. The trade hours for Monday, Tuesday, Wednesday, Thursday, and Friday. Remember, I didn't do a video, but I did say on Thursday I will be away and there may not be a video, and so there was not a video because I was away. So let's take a look at how the market did. Now, as usual, I'm just going to go over gold, but you can, do the hours for anything you want. Now, this is today, but let's go back into last week, which is going to be this one here, Monday. All right. So as you know, last week, gold did have a Monday swing day. All right. And this is where we were at. So Monday, Tuesday, Wednesday, Thursday, Friday. So that's your Monday. Market goes up. Okay, nice and easy, so we can get rid of this. Okay, and then we had Friday, and that's your Friday. So Monday, the market went up. On Wednesday, comes back to retest, does not close below that. Okay, it didn't even stop sweep. And on Friday, here we are, market going back to the upside. So if you use the swing days nicely, these levels were highs. So I did say the market can also retrace, but I did put two arrows on this because it could also like push to the upside and cause us a breakout. And the week was going up. Okay, so as the trend was going up, that was like the way to go. But on Friday, you should have definitely also clocked in your money again, because as you can see, Friday after the Thursday low, Friday market just moving to the upside. Those were the swing days. Let's take a look at the hours. So on Monday, let's see, Monday's hours were, this is Monday, so these were the hours. All right, that's your 8:15, that's your 10:30. All right, so until 10:30, I did say there's a bit of volatility. This is London pre-trade session, okay, and this is New York. So market makes a move. Remember, we're also marking in the PST levels, and this is the Asia session as well at 4:15. All right, so Asia 4:15 coming down, London pushing to the upside, New York blasting away into closing from 4:50 into the closing, because we did have closing as well on that day. So this is gold Monday. Let's take a look at Tuesday. Now, if you were to go long or short on Tuesday, remember Tuesday, Wednesday, let's do this. This is Tuesday. Tuesday, market going up. After the London session, slightly coming down, New York selling off as well. And then New York buying a little bit here. Wednesday, trade hours in Asia, market falls. You see how it's moving at the trade hours. The important thing here is to look at the trading hours and your pricing. If they match, you trade. So if you went long on Monday because it was a swing day Monday, right, then obviously you're looking to buy to the upside, okay, because we want to follow the trade. Now, if you have a big up day like this, ideally the place to buy is where the market closes gap, or where the market caused the breakout, which is this bar. All right, so this is the breakout bar, the cause. So the market dips back down into there to push up. Okay, so if you bought here, you should be going to the upside. If you want to buy again, you got to wait for a pullback, because you can't be buying the highs all the time. You'll just get stopped out. Okay, this is why waiting for a pullback after the impulse wave. Remember the technical analysis program, waiting for the pullback after the impulse. So the market comes back into Wednesday. But look where they're selling. They're selling in Asia. London buys, takes it up into New York, and then the market's down again. New York's doing a little buying into Asia, selling off in Asian trading hours, market selling to the downside. Then it's going to the upside. These are trading hours on Thursday. Market comes down. Friday is a swing day. And this is where the market's buying. Now these white dotted lines, they're obviously PST levels. Did I leave some for today? Probably these are for today. All right, well, this isn't for today. That isn't for today. Let's get rid of these. Okay. So those PST levels as the market comes down, and Friday being a swing day, look, London pre-trade session, London's buying straight away, and that was your trading hour. London buys. London in the morning retraces. This is New York pre-trade session, trading hour, just buying again, going all the way into the next trading hour, sizzling down and pushing up. Obviously, because it's a Friday swing day and they're buying from the lows, you don't want to be selling there for sure. Okay, it's just market pushing to the upside. And Monday, here we are. All right, nice and easy, pushing along. All right, now with the other, assets as well, all you got to do is look out for your swing days. Remember with euro dollar as well, I said we should be coming down into this green zone here, and that's where the market is. And today is actually a swing day for the euro dollar, so we can put this here. Why we can put this here? Because it's a swing day in our zone. All right, so I'm confident in buying, and I've got a PST price at 41, okay, which is 1731. Which is there. All right, so the market is buying at a trading hour at the PST price on a swing day. All right, so that's the kind of trading setup you want to be getting into with your pricing. And this is the weekly, so the market's got possibly room to go up, but if it comes back, we know where we're coming back into prices as well. So all you have to do is, if you're into the euro dollar, you can see that Wednesday was a swing day, and that's where it was. Let's see what time that was. New York 5:30 is, I had New York 5:30 is there, and this is probably news, I guess, or a talk by the Fed. And then it's 10 o'clock. 10 o'clock. Oops. 10 o'clock should be down here somewhere. There, that's your 10 o'clock, and the market coming down here as well. You see how they trapped everybody here. This is a setup where everybody, just all the buyers are now trapped. Market comes down. Thursday again, let's take a look at the Thursday. In fact, let's take a look at Monday too. All right, Monday, you see trading hours, market going up, market going up, market going up. Tuesday, London session, pushing to the upside, sizzling down, pushing to the upside, and then got a breakout in the trading hours. Remember, trading hours can also lead to a breakout. So if you've got direction, okay, you just follow it through. So knowing these things, these hours to trade is important, because then you can also do a box, can't you? Okay, so let's say this is your trading hour, so you can box it in, and you see the market breaking to the upside. So once you break to the upside, close above that, that's it. This is your, any pullback into the box is your buy, and then you can put a tight stop loss and follow through if you want to trade breakout boxing at a trading hour as well. It's doable. I don't do it all the time. Rarely I do it, but it's doable. I like to see if it's at a price level, and then I trade it off. Like with gold as well. Remember, on gold, on the daily, not gold. What was the other? That was Bitcoin, not gold. Euro dollar. All right, so here we are. So like I said, swing day Wednesday, market coming down. And then on Thursday, let's see what were the hours on Thursday for this one. Do I have anything in London? I've got 12:30 to 2:30. This is 12:30 is right there, and then I've got 2:30, which is right there. So you can see the market just banging down, and then it should target, what have I got? 9, 10, 15. So the market comes down. I think this was a weekly pivot zone, and then we've got again 10, 15 here. All right, so let's continue after that phone call. And that's what, 8:45, what did I say, 10:15. So the market is at 10:15 here, retracing and then selling off again into Friday. All right, and Monday, like I said, swing day today on the new week, and it's a good place for a swing to push to the upside. This is nice and easy because market's really bullish to the upside. Okay, and here we are. Now you've got to be a bit careful today. Remember in the video I said this week's a little tricky. So you can actually do the same thing for anything. You can check whatever you're trading. Bitcoin as well. Let's take a look at that. With Bitcoin, come on. All right, here we are. Let's see, what did we have with Bitcoin last week? Now with Bitcoin, I said Tuesday. Okay, so this is Friday, Thursday, Wednesday, Tuesday. So market made to the upside. Now with Bitcoin, you should have been fine, because I'll tell you why you should have been fine. Okay, market made a down day, market pushed to the upside. Because I talked about the 37.5, I said, guys, this is a place where they sold heavy 37.5. So if we come here, you should be in the game. And for that, I also said in the Wednesday comments, okay, where is it? On a Tuesday, I think it was. Can be a flow day, Wednesday. In one of them, I thought I said it could turn into a swing day. That's interesting because I just saw it today. All right, never mind. This is Tuesday, and we had Bitcoin Tuesday, Saturday, and Sunday. So Saturday, Sunday, Friday, Thursday, Wednesday, Tuesday. Tuesday market goes up, so it must be Friday. If there is, get to it, comes, we get there. Okay, I did say on Friday. Okay, I said, okay, if there is news, expect sudden moves until 6, but if it has a direction already, it should keep that direction. So that direction obviously is there. That's the Friday. Saturday, Sunday, breakout. Okay, so it was a swing day and it just fell down, but we were looking to short from this zone in any case. So if you were trading Bitcoin on a Friday, let's say, let's check out Friday. What hours did I have? We had 1 o'clock, and I said expect volatility and disruption as we get to 10 past 8. 10 past 8, that's your 10 past 8 there. Okay, and then, but the turn might come as we get to 9:15. 9:15, this is where the turn. Okay, so I'm looking for a turn around here, and the market's sizzling down from there. Okay, fair enough. Then it should take us to 1 to 145. 1, this is 1:45. This is 1 o'clock. So the market took us to 1 to 145, coming to the downside. It can keep going in the same direction as we get to 325. 325 is there. Okay, 325 is on that bar. And then what did I say? If there is news, expect sudden moves until 6 o'clock. Till 6 o'clock. This is 6 o'clock. Okay, so sudden move until 6 o'clock. But if it has a direction already, it should keep that direction until 8 to 9:20. This is 8 o'clock. Where's 9:20? 9:20 is there. All right, so it pretty much sizzled all the way into there. Okay, and that's basically it, guys. But you know, this 37.5, if you're watching the videos anyway, you should see them. And if you're new to the channel, you can go to my Vimeo channel. You can see all the videos there from last week as well. So all good. And the targets on the PST are all done. And as you can see, we've tapped onto the PST HCL 111.993. This is why targeting is important. All right, targeting is important. All right, have a good one. All the best. It's the weekly wrap up for last